Okay, folks, welcome to Best Stock Charts for the new trading week. This is Bob Desmond over the Contrarian Trader. And what we're going to talk about today are our top 5 stocks for the new trading week. We're going to talk about the ones we discussed last week to see how they did, holding ourselves accountable. We'll talk a little bit about how our performance was last week. And I'll give you a brief overview as to what we discussed in the week ahead commentary. That's our members strategy session that is posted in the members area. So if you're a member, you haven't checked it out yet, please make sure you go check it out so that your mind is right for the new trading week and that we are calibrated. So the markets on Friday had a very, very significant week, or day, I should say, in that you saw the markets spike up higher and then close lower. And it wasn't just the market in general. You had leadership names such as NVIDIA. And when you get those types of bearish reversal bars, I'm going to be talking about this tonight on Sunday Night Futures Live, 6 p.m. Eastern Standard Time. So if you're not on our list or if you're not subscribed to the channel, please do so you get notified. Click that bell button. So that could be a pivotal moment in the equity markets, because what they did is that you had Broadcom and Marvell Technologies come out the night prior, and they missed on earnings. They disappointed on earnings. What did they do with the equity markets? They spiked them up the next morning. That's classic Wall Street pump and dump. They've been doing that all week. You had a rough start to the week last week. We had the S&P 500 triple Qs break ascending wedge formations. Then I told members, I said, listen, they are going to limp this market up higher. Be careful, because they're probably going to fade it at a prior resistance level. And that's exactly what they did. Let me illustrate what I'm talking about so you don't have to use your imagination. So here you have it, the S&P 500, or the spiders. And what they did is back here, they broke support, bid it back up. Back here, broke support, bid it back up. Back here, broke support, bid it back up. Over and over again. So this market has been running on fumes for quite a while now. Then fast forward to Thursday evening. And by the way, before I go to Thursday evening, keep in mind that on no news whatsoever, you were waking up to bright green futures on Wednesday, then Thursday, then Friday on bad news from the earnings from the night before. So you could tell that they were pumping the market, providing liquidity so the big boys, the whales, could exit. And that's exactly what they began to do on Friday. They bid the market up and they sold it off, and sold it off hard. So it's very reasonable to conclude that we're going to pull back further. Is that a guarantee? There are no guarantees in this market. Only that you'll win some money, you'll lose some money. That's it. But what we were doing here is that we were building short positions in the triple Qs, so that when we went into that reversal day on Friday, we're already short, because we anticipated this nonsense that they've been pulling. So might they gap it up higher tomorrow? We never rule out anything on Wall Street. Never. But my prediction is that they'll probably try to excite the market yet again and then reverse it and sell it off again. So we're going to be going live 6 p.m. Eastern Standard Time tonight. Join us for the opening futures action, and we'll take a look at how the futures are opening to see whether or not are they trying to excite the market, to get them excited to buy stocks, or are we seeing some front running of tomorrow morning selling. So how was our week last week? It was pretty good. It was good in the fact that we went in, for the most part, neutral the market. We were short of SMCI vis-a-vis a call spread. It was actually an iron condor, but it was skewed. I had more of a short position on, and either way, we did 100% profits on that one last Friday, because those options expired worthless, because we're selling the options, not buying the options. The options are very expensive, so we're taking advantage of the implied volatility being so big, so expensive on those options. We can't not trade them. And that the reason why they're so expensive is that you have so many speculators in there buying the options on SMCI, and they are bidding them up, betting on another 100% move. It's probably not going to happen anytime soon. So we'll talk about that chart in a moment. Names that we talked about last week and how they did this past week. First one was Amazon. The reason why we liked Amazon going into the new trading week was that it broke out on a weekly time frame. And by the way, we're going to go over on these charts the macro view for the freemium version for YouTube. Members, there will be an extended version, premium version in the members area. So if you're watching this on YouTube, make sure you go to the members site to get the premium version, because we're going to be talking about entry points, exit points, and stop loss points. The names we discussed last week, those entry points, exit points, and stop loss points are already published in the members area. So go check that out. That hasn't changed yet. And we'll be discussing our strategy for the new trades later on in this commentary. But right now, a brief overview of as to why we like them. And I will be publishing on the new trades, stop loss points, entry points, price targets in the members area. Let's get to it. All right, so again, weekly chart, Amazon. This is a stock we like going into the new trading week, and it made new weekly higher highs, but that's not what we were looking for. We were looking for a retracement back down to 176 and then a rally off of that level. It didn't happen. It broke down back into this trading range. Now, perhaps tomorrow they gap it up above 176. The question is, do they close it there or does it fade again? So the key to remember in a market like this, and this is what I coach members all the time, if you're going to open a position, you're going to add to a position, wait till the final half hour of trade. Wait to see how the market's going to close. You're not providing so much liquidity to the market that you're going to move the stock one way or the other. So wait, show patience, because the poor SOB that bought NVIDIA at the highs of Friday or Amazon at the highs of the week, now their weekend is ruined. Don't let that be you. So Amazon stock, we're looking for a gap up here, retest 176. I still like the stock, but it's a watch now. TDW, energy stock, it moved up. We've liked this for a couple of weeks now, up another 1.7%. Reason why we liked it goes back to here. We had a Bollinger Band squeeze. What is that? That is when you have your Bollinger Bands trading within the Keltner channels in gray. It's a compression zone of energy, and when you're in an uptrend, the probability of that energy getting released to the upside is very, very strong. And sure enough, that's exactly what happened here. Now, this kind of left the gate on us because they had earnings that were coming up. They reported good earnings. Actually, earnings were disappointing. It pulled back for a couple of days, and then it just took off on us. So we never really got the chance to get involved with this one. I have a rule, no buying of stocks into earnings. Too much risk. The other stock that we liked going into the new trading week, and we've liked it for a few weeks now, was Airbnb, and it moved up another 3.25% last week. I have to be honest with you, I still like it. It's still on our watch list. The problem is right now, with that shot across the bow in the equity markets, and in particular names like NVIDIA, those are your generals. Once your generals start getting shot, that's a problem. Now, one day does not a trend make. Maybe perhaps they'll gap NVIDIA up, and it's off to the races yet again to $1,000 per share. For all I know, it could happen. It's a very overbought stock. I wouldn't be the least bit surprised to see a continuation breakdown, but let's face it, nothing makes sense lately. It reminds me very much of 2000, and it wouldn't shock me in the least if they gap it up higher on Monday. So don't get lured into a false sense of security that it's safe to go shorting stocks at current, especially very strong stocks, because you can get your face ripped off. We have a way of doing it which has got less returns than simply shorting the stock or buying put options, but our probability of profit is measurably higher than shorting common stock or buying put options. We're looking at about 75 to 85% probability of profit on our short premium trades. That's what we target. So again, are you going to make $1 million on that trade? No, you're not. Can you make a few thousand? Yeah, you can. But the probability of making those few thousand are far greater than the possibility of making millions on buying call options or buying put options or shorting the common stock by just simply selling premium, expensive options. But Airbnb, back to Airbnb, I still like it as a long trade moving forward, assuming that the market holds up in general. Looking at Domino's Pizza, we've liked this one. I couldn't buy this one in advance of this gap up because it had earnings. It's a rule. We will not buy stocks in front of earnings. Let earnings get out of the way. If it gaps up, so be it. We'll look for another entry point. We're very confident we'll get one. So we gapped up. We faded off the highs of the week. Last week was a down week. Are we ready to go buying it? No. We're waiting for this gap to get filled here. Let's go to a daily chart, talk about it for a moment. You can see it's probing a bottom. I think that we're going to pull back. We're probably going to overshoot to the downside here, looking at 430, 435 per share as our entry point on DPZ. And the game plan is going to be buy a call spread, meaning buy a deep in the money call option, but simultaneously sell a deep out of the money call option, thus help financing the trade. Does it cap your gains? Yes, but it also helps finance the trade. So it's just trading smart. SMCI. This is a bank. We're probably going to take this off the watch list because there are other banks that are setting up nicely in the financial arena. And this one did a bearish key reversal. We were right to be bullish on it going into the new trading week. We couldn't foresee the fact that it was going to reverse on the week. So bearish reversal bar. It has never done a retest of this breakout point. I would wait for, let's say, 1460 per share and then look to re-enter or open a position at that point in time. Right now, I would avoid this one. Now, going into the new trading week, I did some scans, and I can tell you right now, I run scans every weekend, and this weekend, there were little to no technology trades on my scans. What littered my scans were financials, real estate, and energy. Littered my scans with them. So that's where a lot of money has been consolidating, because what we're looking for are compression zones, consolidations at which we're ready for a breakout. So many of these names are looking really good on either a daily time frame for a Bollinger Band squeeze, or on a weekly time frame where we both have a weekly Bollinger Band squeeze setting up along with a daily Bollinger Band squeeze. Now, one of those names that has a Bollinger Band squeeze setting up is Lululemon. Now, before we go to the daily chart of Lululemon, you note we're consolidating nicely along that 440 support level. No breakout yet. I don't like the fact that momentum is going the wrong direction down below 50. I'm willing to give it a pass, assuming that we break out and we hold it, we do a retest. Now, on a daily chart here, you could see that in black, you have the Bollinger Bands. In gray, you have the Keltner channels. When you get the Bollinger Bands trading within the Keltner channels and you have a stock that's in a long-term uptrend, the probability of that energy being released is most likely going to be to the upside because the trend is clearly favored. Now, if we were in a downtrend, it would be the same thing. We would follow the trend. The probability would follow the trend that any consolidation would break to the downside. We're not in a downtrend. We are in an uptrend. We're looking for a breakout higher. So members, we're going to be talking about Lululemon in a few minutes on the premium version about entry points, stop loss points, and price targets. PLD, Prologis. Weekly chart, we do not have a Bollinger Band squeeze, but we do have a breakout. We broke out the week before last, retest last week, daily view. Now here you can see the Bollinger Band squeeze. Black lines, Bollinger Bands. Gray lines, Keltner channels. When you get them trading within that trading range with the Bollinger Bands inside the Keltner channels, the release of energy in all probability in this case, given the fact that we are in an uptrend, will be to the upside. And again, we're going to be talking about entry points, exit points, stop loss points, if you will, and price targets in a moment with members. 14-day free trial offer below, folks. First Solar, daily chart. We have a Bollinger Band squeeze on a daily time frame. We also have a Bollinger Band squeeze on a weekly time frame. We have a very nice consolidation on a weekly time frame. The greater the consolidation of any stock, commodity, ETF, currency, whatever you want to trade, call it cupcakes, it doesn't matter. The greater the validation of any breakout. Now, we do have quite a bit of overhead supply here. So what we'll be looking for here is volume. We need a lot of upside volume. We had it the week before last. It dropped off a little bit last week. So members, we're going to be talking strategy here in a few minutes. Stick around. First Energy, weekly chart. We have another Bollinger Band squeeze. And we have a weekly breakout. Game on. looking really, really good. Now, the question is, how do we enter this trade? Do we go jumping in with both feet on Monday morning? No, not simply by the virtue of the fact that it made it onto this commentary. It still needs to show us that it's worthy of our investment dollar. RSI, double bottom setup hooking up. Same deal here on Stokes. Daily chart. Again, Bollinger Band squeeze, daily time frame, and a breakout. So members, stick around. We'll be talking more about First Energy. Apache, weekly chart, multi-week consolidation. No Bollinger Band squeeze here on a weekly time frame, but we do have it on a daily time frame. Loving the consolidation. It's a laggard relative to the XLE, the energy stocks. But if oil continues to press up higher, which it did not last week, expect a rally in Apache. And again, there are a lot of energy stocks, whether they be producers, refiners, all on my watch screen this past week. So I think we're going to see some sector rotation into energy, real estate, and finance. We've already seen the finance stocks move, but I think there's more fuel left in the tank there. SMCI. Okay, so we had a bunch of options that expired worthless on Friday. And you may be saying, oh, that sucks for you. It doesn't, because we were selling the premium. We were selling the options. And we were selling them to speculators that were willing to pay up a ridiculous amount of money for a low probability trade. So we were selling 15 delta call options and around 10 delta put options because I was nervous about a sell-off, because we have RSI on a weekly time frame at 94.11. We also have a stock on a weekly time frame which is trading above or up and into, yet again, its third standard deviation Bollinger Band. It gets better. On a monthly chart, we have RSI 93.25, and again, we are trading above. We closed above last week. The month is not over, but we closed above the weekly or monthly third standard deviation Bollinger Band in red. In short, you're not supposed to be there. So this is not going to end well. So I hope that they spike SMCI up on Monday so I could sell more call options and look to put on a short trade using what you call a call spread, meaning sell a deep out of the money call option, roughly a 15-10 delta, and then simultaneously buy a deep out of the money call option so that you have an insurance policy, A, and B, you have efficient use of capital when you put in this trade on. Because if you sell a naked call, you're going to use up a lot more capital per the requirements of your broker than if you buy an insurance policy. So we could put on a lot more contracts here if we buy the insurance policy than if we didn't have that insurance policy on, because the broker's saying, all right, he's insured. We know the max loss here. If you're going naked, they don't know the max loss, and they have to calculate it and use a formula. So it eats up a lot of your buying power. So members, more to come on this trade because this is not going to end well. So members, let's get to it. So beginning again with Lululemon. Lululemon, what's so important about that weekly breakout? Well, it's significant. Back to the weekly chart to do a little bit of a recap. We've had roughly 3 weeks of sideways consolidation at that 440 mark. That's a beautiful support level. So that's where, and that's it, folks. Everybody have an awesome remainder of your day. I'll talk to you tonight, Sunday Night Futures Live. See you there.